All right, let's jump into it. So 11:40, 2nd of October. So start off with a little bit of that data from sort of I would say yesterday, but there wasn't really anything great. I mean, a whole bunch of sort of PMIs coming out, but nothing really to sort of like shift the market. It's just more again the little bits of the puzzle that you can sort of plug in there. But the one that the market was definitely looking forward to, sort of putting most emphasis on, of course, was ADP because jobs are obviously the sort of the big thing that's been in focus from the Fed. And it's a bit of a tussle between sort of like, the inflation side of things or, the jobs still getting that bad. And I kind of thought this jobs may have stabilized a little bit, but it was shocking, shocking data. Negative 32,000 and last month revised from 54 down to negative 3. I mean, look, every month that these things come out, we saw the big revision the other week, and it was like, for NFP, minus 911,000 over the whole year. Um, and this is the kind, I mean, look, ADP makes up a portion of NFP, yes, but, when you sort of go, oh, we had 54, oh, actually, no, it turns out we had negative 3. Come on, I mean, look, you're not even in the ballpark. You haven't even sort of like, there's nothing you can say about this. You've gone from a positive number to a negative number. Like, just anyway, it's just you can't trust these sort of figures and that. But point is, at the moment, you got to take what the numbers are presented to you, presented to the market, and that's all we can do. We could trade off that, and they were some shocking numbers. And as such, US dollar sort of got slapped back down. And it's been a tough week for US dollar, particularly off the back of a decent week last week, which I'll show in the charts in a sec. But it finished on a high, had some strong data, bang bang, and then just fell. It's just fallen all week. And look, this data also saw it sell down, but it didn't completely break down. And I think there's possibly something in that and something to unpack about that because I think the government sort of shutdown at the moment is still kind of a big sort of great cloud sort of hanging over the market. Are we going to get NFP numbers? Is ADP and JOLTS, are they the only numbers we're going to get? Who knows? Unemployment claims I think should come tonight, but again, it's just a very sort of sticky kind of situation on that front. But yeah, so big X in on the side of any potential strength for the US dollar just off that ADP number there. Um, ISM came out and nothing this kind of stuff. This is kind of like within the ballpark. Missed a little bit, expected a little bit of a slowdown there, a little bit below, and then sort of like on the manufacturing um, PMI opposed to prices. It sort of came in just a scratch above, so it's moved in the right direction and slightly above there. But this is kind of not overly impactful, and yeah, it kind of just bounced around a little bit, didn't really sort of produce too much with that. One interesting thing I did note with this, and I'll show it in the charts in a moment, this ADP, this weaker number over here, obviously that is on the side of caution and a bit of okay, well it bolsters the argument for no, the Fed's got to cut and they've got to sort of solve the sort of weakening jobs market. That should push gold higher. Now, gold has already been ripping, and it's ripping for a number of reasons anyway. Geopolitical sort of stuff, like the Ukraine kind of stuff, which is sort of, it feels has flared up more, or at least it's made its way to the headlines a little bit more in the last couple of months than it had for quite a while. Gaza sort of stuff going on. Again, you can sort of say with that, and I mean the fact that sort of they're sending the army into their own cities to sort of like sort of try and get on top of all the sort of civil distress, whatever, unrest. These sort of factors of sort of like all this kind of stuff. That with the Fed potentially cutting on top, that's about four things that are pushing gold at the moment. But this should also bolster the idea for gold to be a bit more of a profitable thing. But the price action around it, they sold into it, which, if you remember around the time that they were dropping bombs on Iran, they were also selling into that. And we saw I'll cover this with the chart, but we saw the reaction after that. And I think that's important. I think that's a telling sort of thing that, I mean, gold's been ripping. It's just clipped under 3,900 overnight or yesterday. And yeah, it's due for a cool off kind of thing. But the fact that that's as good a reason as any for gold to sort of charge through 3,900, and they didn't take it with that, and they actually sort of sold into it, and they sold into it quite quickly. Like we're talking sort of 10 minutes later, it had dropped $20 off this data, which should be supportive of it moving higher. I think that's a little bit telling as well. And as such, actually, just having a look now, we did actually come down and test that sort of at least short-term breakdown level. So we'll see how we go. We see how we go. Gold has just been a behemoth. All right, so that was data overnight. We just had Aussie data out over here. So we had the trade balance and also household spending, both weak. And also, actually, I just saw this also revised down. So revised down last month, expecting a slowdown, came in abysmal, 1.83 billion. Very low for that. And the theory with these kind of things is obviously sort of that with trade balances being low, this is not necessarily like the government will enact this, but this is in theory, if you sort of play with, sort of go along with me here, what the PBOC has been known to do in the past is deflate their currency to make their exports more attractive. And so with that, obviously a weakening of the currency. Now, I'm not saying the RBA or any part of Australia is necessarily going to do that, but the market itself could readjust to that. Now, it's not sort of like this is like top tier data or this. Again, it's a ticker across in either side of it all. But in theory, to get these numbers back up, a cheaper currency makes it more appealing for people to buy the product, so your trade balance will go up higher. So a weaker currency. So that's the idea where you'd probably see some Aussie weakness off this bit of data. You also had the household spending month on month, and this is expecting a little bit of a slowdown anyway, but we see a bit of quite a sort of significant sort of drop off there as well. And the reason that this is interesting is because Bullock was sort of touting the other day after the rate decision in the press conference, saying that the economy's not in too bad a sort of shape, and that sort of retail spending is still out there. Just having looked sort of through some of the notes, so real incomes rise, and okay, we expect to see consumption rise, and obviously this is a positive. Well, I mean, household spending is a form kind of basically of sort of consumption, and obviously that's dropping off. So it's against what she was sort of saying. And again, if you play these things out, you sort of think, okay, what time would you sort of be going, okay, let's hold back on our spending? Well, you'd be doing it when you're kind of worried about potential costs that are going to be coming up. You're not sort of like stressed about, are you going to pay your bills next week and then go out and buy a new car? It just doesn't work like that. And so, when you see these slowdowns over here, you can unpack it or sort of take it down to a level it's probably of a little bit of low confidence. People are sort of like, oh, I'm not quite sure. Or either that, they just don't have the money. You know what I mean? They were forever sort of flicking the TV on and they're saying, oh, cost of living, yada, yada. Keep in mind, you still need to book a week in advance to get a table on a Saturday night for dinner. But the point is that, if you see these numbers sort of dropping off over here, and there's lower sort of household spending, well, that then does flow through because, then it's sort of like lower sort of consumption, lower sort of spending in the market, lower can potentially lower GDP. And that economic data, if we start to see GDP drop off there as well, well, how does the market, or how will the RBA sort of react to that? Well, you kind of stimulate, you stimulate by the way of sort of lowering rates. So again, lowering rates, then a bit more of an idea of Aussie a bit weaker. So two bits of Aussie data there that sort of support more of a continued cutting sort of cycle at the moment. And that's the big thing in that. Like they tout the sort of the CPI and the inflation and all this kind of stuff, but these are other sort of parts of the puzzle to sort of put in there. Now, immediate reaction from Aussie isn't necessarily, oh, okay, bang, it's dropped through the floor. But I think that goes to show that, it really is the tail end of what they're doing with the US dollar. And this is what I've said a number of times, that Aussie can have good data, bad data, and it won't really affect it so much, at least in the immediate, based off what's happening with the US dollar on a broad sense. And that's why we use DXY to sort of get a bit of a gauge about how the market's reacting to US dollar. But should they start to buy up the US dollar, plus you've got weaker local data, well, that means Aussie will probably get hit a little bit harder. The flip side of that is obviously if we have sort of stronger local data like we saw with the CPI, a little bit stronger, sort of is more in the camp of a stronger, because obviously the hold aspect with the rate decisions hold Aussie up a little bit. Even if they buy US dollar, it doesn't get hit as hard. So it's almost sort of like a multiplier or a sort of retarder of what the move will be with the US dollar. And obviously, sort of like, if we're selling off US dollar with strong local data, well, bang, bang, Aussie will do very well. Anyway, so that's a little bit of data we just had come out there. Through the rest of the thing, we've got CPI over in, for, what's it? Swiss National Bank, SNB, over there. Now, I saw a headline, and not that it's super important, but they were saying they made a promise also to the US, sort of saying that they're not going to manipulate their currency because they're having a bit of a tough time over there, and their rates are sort of, I think, at zero or something like this. They're seeing inflation month on month moving into this is deflation. So there's disinflation where it's coming down. So everybody's been at 6 and 7%, and we're coming down to sort of 5, 4, 3, 2, like that. And then you've got disinflation, and this is not what you want to see your economy doing. You don't want it sort of moving backwards, because that can also be quite detrimental. I've sort of covered this before, because obviously, sort of when that's happening, you're less inclined to buy product, like as a business, buy the products to restock the shelves if in a month's time those products are going to be cheaper. So you sort of hold off on restocking, or you buy just enough to get by. You don't buy any excess, because next month, instead of it costing you 100,000, it costs you 90,000. Obviously random numbers I've just picked, but that's the idea. So this is why, like all these central banks have a universal goal of generally around 2% year on year. This is month on month, to sort of keep things sort of ticking forward. So it could be actually quite a bit of a spiral over if you do get that sort of deflation kind of numbers over here. Big one that they're probably looking for, unemployment claims. Again, I'm not quite sure if we're going to get this tonight. I assume we are, but I'd have to sort of look into that. This has actually been ticking down lower and lower. So it's a weird sort of situation at the moment, because they're not adding jobs, but you're not getting the unemployment. It's not like these people are being fired and then sort of like, they can't get another job, because if you sort of like, if you're not adding jobs and the unemployment numbers are going higher, well, okay, you can sort of put the two together there, but they're not hiring, but you're not sort of like seeing a big spike in unemployment. So it's not like people are getting fired and unable to find another job. They're just sort of maybe they're not getting fired, but people are just holding it off and from hiring at the moment. So it's a very odd sort of situation over there at the moment. But again, around these sort of 220, expect a little bit of a tick up, unless we get a blowout to sort of say 230, 240. I don't see this as being overly impactful. Lower number will be a bit more sort of US dollar, US dollar positive, and also some factory orders going on over there, and a couple of speakers. So we'll see how these ones go. I don't know this is like going to Goolsby, but I know the sort of the big two. I guess it would be three, two dissenters. One is the new Mirren person, but Waller, Bowman, and Mirren are all in the camp of, hey, let's cut more. So I assume these other people are probably a little bit more on the hawkish sort of side of stuff, and just sort of wait and see kind of sort of stuff, and more sort of focus on inflation. So we'll see how that sort of goes. And with that, we'll just jump onto the charts. I'm just seeing Aussie kind of like take off a little bit, which is very odd, given everything I've just said with the data. But it goes to show that these things aren't really sort of the gospel in that sort of sense with it all. All right, so we have gold. Obviously, we ticked up here, as I say, just under sort of 3,900 overnight. It did sort of briefly stick out there, but obviously bang back down underneath this 4-hour resistance. Where are we on? So we're on the 4-hour here. So it's really sort of just sort of consolidating this pullback here at the moment. So consolidations, in theory, kind of favor the idea and the direction. This did not have any sort of strength in the RSI in that last sort of little push higher. Of course, we had that big sell-off, took out the top, took out all the sort of stops. Anybody that caught stops here and didn't take any profit, they got sort of stopped out over here and then sort of back down here. So you would think with this, in theory, you probably sort of see a little bit of a cooling, possibly back to, maybe this sort of channel support down over here, maybe around that sort of like 38.18. Should we take out a couple of these levels? Now, it seems like if we get onto the 1 hour, you can probably see it a little bit better. This is obviously a little bit of a support zone that we got going through here. And I would say this is where you kind of want to see price for a downside move, continuation by the way, sort of move through here. So I think obviously this is the level you need to get a close underneath. You could have sort of said on the 1 hour that this is a bit of support here, but if anything, it's just done a fake out, boom, move back up. So I think this is better. We've seen it sort of like be a resistance, we've seen it be support, and obviously it's come back in here at support again. So underneath that 38.50. I would say you're probably sort of looking to sort of come down to around this sort of 38.38, and then under that maybe to this sort of trend line should we see a continued move down from here. Very wonky, but this is effectively a little bit of a sort of head and shoulders here as well. So if we were to sort of play that out, it'll be around here, and then back down. Measured move of this. We'll give you around that sort of again, sort of depending the sort of speed that this thing would come down, would probably come pretty close to this main sort of trend from the downside here. Which, I mean, would still keep this whole bullish movement intact, because obviously this is your sort of kind of low that you would need to get underneath here, where we saw from the other day with that sort of sell down. That's quite a dramatic sort of sell down, but boom, V shape. I've said it a number of times. I've never seen so many V shapes in my life. This year has just been absolutely filled with them all over. But anyway, underneath sort of 50, that's probably where you kind of could look for that move to play out. That'd give a chance for things to sort of cool off a little bit. I mean, at the moment, it's moving back up anyway, so we'll see how this goes. It really, again, like everything, comes back down to the US dollar. If they sort of dump this thing down, then most likely, we could just look back up to these high levels over here. But you'd want to see it above 76. Should you sort of want to go above a bit higher in that. I think we could probably maybe see a little bit more consolidation through here, but underneath here, you could definitely see potentially a little bit of a head and shoulders sort of play out, and then sort of maybe back down to this sort of trend line, depending on when you came down to it, but probably around that sort of low 38s before we see a little bit of a bounce. And as you can see, that's the trend line coming off sort of 36.40 or so. Let's flick on. So we got DXY. So this one, actually yesterday, I sort of put this on because it had a bit of this negative divergence coming off the 78% of this last drive up here. I was around here, I think, sort of like when I was like, yep, okay, here, I sort of put a chart on X. It sort of moved up, did well, and then of course that data came out and wiped it back down. And then, as I said, it didn't melt it down. And that's the thing, I think there's a little bit of the takeaway with it. Like, this is where we ended the week. So like, where was it? Yeah, kind of thing. So, bullish momentum into the end of the week, hit that sort of resistance, and then opens this week and just melts. Like, it's just, there's no massive revelations that sort of came out over the weekend, other than potentially maybe pricing for this lockdown, shutdown of the economy. Obviously, we had a whole bunch. And we do still have some job numbers and that to come this week. But it was pumping into that level, and then as soon as market opened on Monday, they just went bang and smashed this thing down. So but it is sort of grinding. It's found itself a little bit of a channel through here. This is a little bit of a 3 drive, 1, 2, 3 down here off the 78. Negative divergence, that's still moving up over there. So, if this thing sort of continues to sort of dribble down, you could see this sort of roll back down to the bottom side over here. It's certainly, at the moment, it is trying to hold it, but as you can see, if you look at these highs, they are still technically coming in lower, lower, lower. So it really needs to prove itself back up above sort of 97.80, really above 98. But yeah, at the moment it's just looking like yet another day, bang, sell the US dollar. Yeah, quite a tough sort of trade there. Aussie. So, despite all my sort of breakdown of everything, saying, oh yeah, we've got sort of weaker data there, it's taken off. But again, I think this is more US dollar is weak, opposed to hey, like because that data is not positive for Aussie. You wouldn't sort of be going, hey, look, trade numbers are down, people aren't spending. Wow, that loads us up with confidence, and you move up to the top side. It just doesn't work like that from a sort of fundamental sort of standpoint. But again, it's not like a defining bit of data. It's not like a rate decision or a CPI or anything like that. So it's not going to be the one that dictates the market. But at the same time, if US dollar selling down just by default, uh, Aussie will buy more of the US dollar. So US dollar is worth less than it was an hour ago, whatever. Just as an example, well, that means Aussie will buy more of it. So it's not sort of like, hey, let's buy Aussie because it's good. It's more let's buy Aussie just by default because US dollar's weak across the board. So there is it sort of bounce back up here, and again, look at the V shape, endless V shapes. The whole year has just been unbelievable with these sort of V shapes here. So I wanted to get down underneath 65.90 yesterday, kissed it, and then of course reversed. Little V shape there as well. But really just sort of consolidating this zone here, stuck between these two levels. And this is what I say with Aussie. I mean, I say it pretty much every day, but 20s, 90s, 60s, they're the levels that you can see generally a pretty good, consistent reaction. You can see support, 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 resistance here, resistance, resistance, resistance. It's a third run into this level. So if you take out the highs here, if you take out sort of like 66.30, you're probably going to look up to 66.60. As you can see, it just kissed into that level. It was a support previously before there. And if you could trade between these levels, they were talking 20, $30 sort of moves here. So, sorry, 20, 30 point moves. There's some decent sort of intraday trades to be had. But as I said, if they start to buy the US dollar up and you've got weak local data, that's when we'll start to get a move back down. But for the moment, it just seems to be consolidating. It hits 20s, it sells back down. Hits the 90s, moves back up. So, you can put a little box around this, and this will give us our kind of direction. Pretty much a close out of these areas here. I would say a close out of these areas will sort of give us a bit of a move, a bit more direction. But obviously, you want to get above, high 29.30, move up. You want to get a sort of close into the 90s, move down. But at the moment, look, again, consolidation favors the direction that it's come in, but it's just a question of whether we move further up. I could almost sort of see this, even if this was to go higher, a potential sort of move back down, maybe around to these 70s, and then sort of a bit more of an inverted head and shoulder with this sort of 66.20s being the neckline. Structurally, that would probably sort of work a little bit better. But in saying that, we've seen an endless V-shape recoveries all through this year. So particularly with the Aussie, I mean, look at this: down, inverted head and shoulders, straight back up, down, straight back up. This one didn't really sort of, that's a bit wonky in that. But the point being is that I would say even if this were to go higher, you would probably want to see some sort of move down and then a step in of buyers from this 65 70s level to then give that kind of move. A bit wonky there, but you get the point. Put that one there. That makes it a bit straighter. That's what you could probably want to see if you want to see this thing go higher. And I mean, look, that measured move would take you all the way to the top over there. But again, look, it's really at the mercy of what's going to happen with the US dollar. If the US dollar sort of takes off, we're going to see this move back down here. But this is an area that I'll be sort of paying attention to over here. Whoop. Everything's a bit wonky today. Around this sort of 70s level. This is the same level. Obviously, we've seen it as support, support, where we had that little flick down the other day from that BHP China news, and it held that sort of 65, 75 level. So it'd be interesting. At the moment, it's obviously looking like it's just hanging near the top over here, but we'll see how the rest of this session goes. Gold just took a little bit of a clipping, $6. All right, cool. So we move along here. Where we got copper. Copper's doing a little bit better actually. It just keeps grinding high, doing its thing. Let me go here. A little bit of an ascending triangle almost sort of breaking out here. Look, again, we saw the sellers stepped in here. If it pushes through here, it could keep grinding up over here. I don't know how much of the market would be short on copper, because like none of this really gave you any reason to be short. You know what I mean? Apart from the fact that it just like punched up 17% or something in one candle, you kind of sort of taking a bit of a risk by shorting around this area. This move down came so hard and quick. It's not like anybody was really sort of like, unless they had some sort of like orders to be filled, which kind of, again, you've just had a 17% candle pushing at sort of multi-year highs or all-time highs. Um, it didn't really give you time to be short, but maybe people have sort of been shorting into this and they're sort of like putting their stops above and that's sort of feeding this thing as it grinds up higher. But at the moment, look, it looks a little bit better, but again, it's a very long way back up. I just sort of feel with this that it's going to have another move, not maybe as dramatic as this. This was news or headline driven, but I have a feeling it will have a sort of pullback at some point down over here. I'm still targeting this line over here, which is a long-term sort of rising support. I would like to see that sort of touched up and then held to say that's a bottom. But for the moment, it's still grinding high. And you'll see one. Another thing, yesterday we were having sort of a little push up here. Aussie got a little bit of a push down, went down into the low, into the 65.90s, and then sort of boom, US dollar sold across the board, bang, back down. Just can't really sort of get up. I mean, look, it's holding. It's technically at the moment putting the highs. The danger with this is really that it comes down here and they take it underneath 708. If they go underneath 708, I don't know, gold 4,000, Aussie 67, I don't know, these sort of things here. But like the yuan has been just ripping through here. I did see something the other day where they were sort of saying, because the whole idea with what China's apparently attempting to do at the moment is to obviously sort of move away from the US dollar. And that's why sort of they're so hurriedly buying up gold, and that's why gold prices have gone through the roof. They then sort of try and sort of sell, or they do deals with oil, which is then settled in yuan, which then creates demand for that currency. So this is as obviously USD CNH. So moving down here is representative of a stronger yuan, which we've seen all through this year from April, coming all the way down here. And then it creates a bit of a feedback loop because people have bought the stuff and settled in yuan, then they then have to either sort of buy or sort of purchase things in yuan because that's the currency that they've got, which then sort of hopefully drives their data. They've got pretty weak sort of consumption themselves, but then they also can eat. So they've got two choices of that: either sort of purchase things in yuan, which again sort of bolsters the strength and the idea that the yuan's a stronger sort of currency because people are purchasing things in that, or they buy gold in that. And again, they buy the gold in the yuan, and that's what feeds the gold market. So it's a bit of a sort of loop, and then the sort of gold moving up. They've got a lot of gold reserves. It's kind of like it's a gold backed currency, but it's not. But the idea is that sort of obviously sort of like a stronger yuan and stronger gold can kind of sort of move together. And that's why you get a bit of a correlation between the USD CNH, yuan, and gold prices. So if we do see this start to move up and we see the yuan weaken, it will most likely be around the time that we see gold come off a little bit as well. So gold coming off, yuan moving up over here. And this is how we can use this chart as a little bit of a proxy. But just like with the US dollar in DXY, it can't hold a rally. It just gets absolutely hammered time and time again. So we'll see how we go. 715 is still the key. I don't know if I want to sort of call this. It kind of is a little bit because we're seeing this area over here, this 712 hold, as it did on the way down. Seems like inverted heads and shoulders everywhere at the moment, but that could be the way to move forward through here. A measured move with this one would be this move here, the 715 being neckline, and that would be our break. So that would be our price target, which is up around this previous level where we've sort of seen a bit of resistance previously. So that would be price target based on a break of 715, and this kind of being, albeit a bit of a wonky inverted head and shoulders. There you go. On the daily looks a bit cleaner, but you are seeing that kind of stuff. And as you see, this is kind of where we've seen the market hold this thing a couple of times previously. There's a bit of a resistance around here, and obviously these things aren't an exact science with the inverted heads and shoulders. We get rid of the wick because I don't like using the wick with these things. And you put that up here. Let's move this down. Bang, and that puts price target straight in that sort of resistance area. Which, again, look, it's not the gospel. It's going there. But should we break 715? That's your measured move at target. Call it 720, 719.5, these kind of things. But with this breaking high here, how do you apply it unless you're trading this? Well, as I said, like gold will probably have a bit of a cooling off should this move happen. Aussie should cool off here a little bit as well, just based on the fact that a cheaper yuan probably is a signal that they're probably not going to be buying as much. And if they're not buying as much, well, we've already seen sort of trade balance look quite weak, then that could, in fact, sort of like flow onto the Aussie as well. So impact the Aussie. So, okay, Aussie, another reason, lower the sort of Aussie sort of price. But again, all this is based on the idea that we get a break above here. The downside risk, as I said, is if you go through 708. Go through 708, or obviously all that's obsolete. Aussie's up to 67s, probably higher, and also gold, probably around 4,000. Should that break to this bottom line over here? But I think that's kind of your directions of where you're really looking for this thing to move. So we'll see how it goes, but really it comes down to US dollar being somewhat attractive. There's a very strong support area around here, but it's had its effort, just needs that second effort and push through 715. All right, that's it from me.